Wolfpack, we have a lot to discuss on Bitcoin today. I know I say that every video, but rarely we do today. And before we get into it, I do want to quickly give a quick reference to the fact that the VIP membership has launched. We had 72 hours of openings starting yesterday. So right now, as of current, at the time of this video being posted, basically, you have 48 hours left to join the VIP membership. You can do so using a link that I'll put in the pinned comment and description. Join that information group, and it gives you the instructions as seen on the screen here to join the VIP membership. Again, 48 hours to do that. If you haven't already done it, you want to do it, you have 48 hours, just a heads up. So yeah, I'll let you guys decide if you want to do that or not. Regardless of that, Bitcoin today. Okay, so where do I start here? There's actually, it's very rare where I don't know where to start, but I genuinely don't know where to start. What I will say, okay, I'll start it out like this. What I will say with Bitcoin is this, okay? Previously on Bitcoin, ignore the buying plan, ignore this writing. It's not relevant at this point in time. Previously on Bitcoin, I thought this, and in fact, I didn't think it. This is what the charts told us. We had this thick yellow downtrending line on Bitcoin. We also have 3 red horizontal levels, all of which are equally, or not equally, but all of which are very prominent as potential bottom zones for Bitcoin. The first one is at 17.6k, which of course was the June low. The second one is at 13.8k, which we'll look at in a second. And the third one was at 11.5k, which again, we'll look at in a second. But all of those zones, those 3 levels, I identified as the potential bottoming out zones for Bitcoin in terms of horizontal support. Now, I still stand by that. And I still think, as per the 4-year cycle, I still think that Bitcoin will bottom out in Q4, which means it will bottom out anytime between now and next year, anytime between now and the 1st of January. That's when I think Bitcoin will bottom out. But what I said before, based on this chart, is that Bitcoin would actually bottom out somewhere between now and the end of November. Now, I said that because we had this downtrending yellow line, right? And the price was compressing between this downtrending yellow line and 17.6k, but realistically, the price could have been compressing between this downtrending yellow line and 11.5k at the lowest, in my opinion. And then at that point, we would have to break to the upside because that's where I thought the lowest possible bottom would be. So I used the yellow line, the downtrending yellow line, as a kind of speculative line to determine when Bitcoin would bottom, right? Because we can only compress between 2 levels for so long. Eventually, this yellow line crosses below support zones that I would deem to be potential bottom, and we'd have to make a move either up or down. And we can only do that for so long. And yeah, so I said, hey, look, this downtrending yellow line in accordance and in coordination with the support lines, the horizontal red support lines that are shown on the charts here, will determine basically that the latest we can bottom out on Bitcoin would be at the end of November at the lowest price of 11.5k. Now that's broken now. And how is that broken? Well, it's broken because we broke the downtrending yellow line. We broke the downtrending yellow line. However, we did not see a strong breakout, okay? Now, that's not to say we won't see that breakout continue. That's not to say that we won't see a resistance support flip and then a break to the upside. It is to say, though, that there is a very, very, very decent chance that we just don't do anything now, right? Due to the fact that we have major macro events coming up. CPI coming up in 3 days. If CPI comes in bearish, which we'll look at all at a second in the end of the video, if CPI comes in bearish, we will just drop back down on Bitcoin, right? And then that macro yellow downtrending line stemming from the November top will lose a lot of relevance, and therefore we might just be, in the blind as to when it will happen, and our best guess might just be Q4 as per the 4-year cycle theory. I hope that makes sense, okay? It's very hard to describe, but essentially, yes, that downtrending yellow macro line in combination with those horizontal support lines determined, in my opinion, that we would bottom out by the end of November. Now, that macro yellow line is losing validity because we've broken out of it. And from the breakout, we've seen no bullish price action at all. In fact, we broke out from this line literally 7 days ago, okay? And we've seen no bullish price action at all. We went straight into a double top formation, straight into a descending channel formation. We broke that to the downside as well. So this breakout has not been a breakout. There's no price action here that would in any way construct any form of breakout for Bitcoin. Therefore, that macro yellow line is to an extent invalid as a predictor as when the bottom will be. So now we don't know when the bottom will be. Our best guess now is just based off purely Q4, right? As per the 4-year cycle theory. Q4 is our guess now. We're back to that. That whole before the end of November thing, it's kind of lost validation. It's back to Q4. It's back to the end of the 1st of January. Before then, we'll see a bottom out. That's my opinion now. That's very important because that takes a whole month off, adds it adds an entire month, the entire month of December, to the potential bottom range for Bitcoin, right? Very interesting stuff that's happened there. Now, for those of you who are interested in my buying plan, you could pause the video here and take a look at the 3 scenarios that I've outlined. It might seem overly complicated to have 3 scenarios, but in reality, I'm just covering all bases. I think that's very important to do in this kind of thing. So pause the video, take a look at that buying plan. I'm not going to go into it too much. People are already very much aware of it who watched the channel before. If you're new to the channel, that's the buying plan that I'm going with. And by the way, look, we're getting very close to 18k, right? We've actually come down. We're at 19k now. Again, we've broken, we had an M formation, double top formation, broke down into a descending channel, broke down from a descending channel, which is typically not what you see. You don't really see descending channel breakdowns all too often, but we did see that. And yeah, look, we could be conducting a resistance support flip here. That's entirely possible. And in which case, cool, but we have no confirmation of that at this point in time. What I can say is that the short term does look like we will be seeing a resistance support flip. Okay, we have a bullish divergence in the RSI. We have a triangle formation on the RSI forming that is seeing an apex coincidentally or not so coincidentally because, by the way, coincidences don't really happen in a financial market. Everything's kind of laid out. And it happens naturally. This triangle on the RSI will be having an apex at around the time of CPI. CPI, the date of CPI is this pink dashed line, right? That's when CPI will occur. So it's no coincidence here that the triangle will be having a breakout before CPI or around CPI, meaning that when CPI occurs, not only do we have CPI itself giving volatility in the market, but we also have the breakdown or break upwards from this RSI pattern that will bring volatility in the market as well. But it's no denying right now, price action looks a little bit oversold. Okay, we look a little bit oversold, I won't lie. And we're seeing bullish divergence in the MACD as well, just to top that up. If we looked at the volume as well on the Binance chart, which I'm not going to do right now, we can see the volume is starting to descend in this downwards trend, which means we're getting ready to see a local bottom here for Bitcoin. Now, that's kind of a short-term analysis. It looks pretty good on a short term. And it looks like we might be seeing that resistance support flip. But even if we do see that resistance support flip, I'm unconvinced that Bitcoin, is really harnessing the full potential of what this breakout from this yellow macro line could have been. It's definitely not a strong breakout, and it definitely was a bit of a disappointment for Bitcoin here. But regardless, not really a disappointment for me, right? Because I think the bottom's going to be in Q4. So it was a little bit preemptive. I wasn't expecting a breakout that early, but there's many reasons why we did that. And a lot of the reasons stem from the macro, which again, we'll look at in a second. But before we look into the macro, I want to, quickly take a look at the weekly chart on Bitcoin and the monthly chart on Bitcoin. There's 2 very significant levels on both the weekly chart and the monthly chart, okay? Now, the weekly chart, this is the weekly chart, has a very significant level. Actually, let's go to logarithmic so we can bring it up a bit better and get a bit of a, bit better point of view here. What we had, actually, let's go back to linear. Okay, what we had essentially is a level on the weekly chart, okay, at around 19.7k. All right, this is the weekly chart. 19.7k was that level. Let's move these lines around a bit. I think they've got a bit muffled up here, but essentially the point still remains. 19.7k, this top yellow line, is a weekly chart support level. What we did, throughout the month of June, is we came down, we tested it, we didn't drop below it, we're looking at candle closes, we came down again, we tested it again, we didn't drop below it, we actually bounced off of it again, and then we finally dropped below it, and now we're below it, and we've come up with resistance support flipped off of it, and now we're seeing bearish price action under it, which means we very well could drop down further on Bitcoin, not only to 17.6k, but also potentially down here to 13.8k, which I would see as the next potential bottom below 17.6k. How do I get that number, 13.8k? Well, look back. Look at the weekly chart in history, right? And we'll look at the monthly chart in a second, which further supports this. But the weekly chart shows pretty clearly 13.8k, sorry. Very strong support zone, right? Tested it for support here before we broke down, bounced off of it, dropped down. Tested it here in 2019 as well. And before we had the bull market, we tested it once more. If we look at the monthly chart, we just further consolidate that same point, okay? Let's remove these lines that I just drew in here so we can get a bit of a clearer point of view. But it's essentially showing us exactly the same thing I just described. 13.8k on the monthly chart as well. Right, this dashed yellow line is very much the next potential bottom below 17.6k. Therefore, if we do drop below 17.6k, we will be going down to 13.8k. It's very clear that that's the case. There's no support in between those two zones. Look at this chart. There is no support. There is no support between the June low at 17.6k and 13.8k. There's literally nothing there, right? There's actually no historical price action there. And if you look at moving averages, there's really nothing there as well, right? So again, drop 17.6k, we'll go to 13.8k, right? And it does look increasingly likely now, as we progress further and further, that, hey, look, maybe that's a potential chance. Maybe that happens, okay? And I've been very clear in the past. I don't know what's going to happen. I don't know where Bitcoin's going to bottom out. I do know when it will bottom out. I know that it will bottom out in Q4. The evidence for that, in my opinion, is abundantly clear. The macro supports that as well, which we'll look at in a second. But I don't know where exactly it will bottom. I think 13.8k or 17.6, a double bottom at 17.6 would be perfectly logical. Now, heaps of people would say, Wolf, why would you expect 17.6k to be the bottom? For the simple reason that we haven't seen anything in this bull market that is dramatically unconventional. And what we generally see in a conventional bull market, bear market bottom, I should say, is a drop down from a horizontal level. For example, we had a horizontal level in 2015, in 2018, and in 2021. We generally see a drop down from a horizontal level, one capitulation, and then a rounding bottom and come back up. Drop down from a horizontal level, one capitulation, rounding bottom, come back up. Same thing happened here. We've dropped down from a horizontal level. We saw one capitulation, and we might be rounding out and coming back up. That would be my argument for 17.6k bottom, right? I don't think it's dramatically unlikely that we see a 17.6k bottom. There's other reasons, but that's the vague reason. Now, look, we do have plenty of time in Q4. Again, we could go lower. If we do, it'd be 13.8k. But ultimately, right now, there's no real way of determining, perfectly where the bottom will be. There's other reasons why I think 17.6k could be the bottom. If we look at CBBI, of course, being the Collins Talks Crypto Bitcoin Bull Run Index. This kind of measures the chances of a Bitcoin bottom and where the price is going, and the chance of a top, where the price is going, etc. And we're right now at a very low level of confidence, meaning that the bottom is likely either in or very, very close to being in. That's another reason. That's using conventional metrics, which again, we have no reason to believe aren't working. People say to me all the time, Wolf, this isn't a conventional bull market. It's not a conventional bull market. We're seeing recession. I just disagree with that. I just plain and simple, I just disagree with the fact that this is not a conventional bear market. It simply is. Okay, in terms of price action, there is nothing here that's happened that's unconventional. I hate to sound like a broken record, but we topped out perfectly as per the 4-year cycle theory. We're seeing the exact same structure we usually see during bear markets. And there's just nothing, and all the conventional indicators are saying, hey, look, the bottom was in at 17.6 and we might go a little bit lower to retest it. That's what every conventional method is saying. So I do understand that there's a chance for a 13.8k retest, for sure, 100%. But I also do understand that that would make this bear market more unconventional than not. Okay, and I can't, as a trader, as an investor, looking at macro trends, relying heavily on macro trends, in fact, the entire basis of my prediction for the top was on a macro trend. I can't just discount all macro trends and just say, all right, yeah, well, look, we're not going to bottom at 17.6 because, I don't know, the macro is bearish. It's like, it's a bit ignorant to say something like that, in my opinion. But, I've all this information's been covered before. I've covered all of this before. I want to get into some new stuff because there's a lot of new stuff happening as well, right? Not only, well, I suppose this downtrending line on the Binance chart here that I showed, that's definitely new. And the fact that we're no longer predicting the bottom between October and November, we're actually predicting it between October and December now. That's definitely new information. So I shouldn't say I've covered this before, but a lot of this stuff here in terms of conventional bear market and horizontal levels, that's all information I've covered before. What I really want to look at, and what I really want to look at here, is the macro, because the macro is getting quite interesting. I want to briefly interrupt this video to talk about the BitGet exchange. Now, the BitGet exchange has 5 times lower fees than Binance, which is commonly referred to as the cheapest exchange in the cryptocurrency market. It's also non-KYC or voluntarily KYC, so you can stay true to the fundamental values of cryptocurrency, one of which being anonymity, of course. It's also got a security fund in there, so if you lose your funds by fault of the exchange or by personal fault, you can make a claim and actually retrieve your funds back. On top of all of this, if you sign up using my referral link, you can get access to exclusive discounts and rewards. This is the best exchange on the cryptocurrency market, and I use it personally, and so should everyone at the Wolves of Crypto YouTube channel. Now, if you're interested in actually learning how to trade for yourself, you can check out the Crypto Academy via the website link in the description below. This is a course developed by myself and Mega Crypto, a 10-unit course taking you through every single step from step 1 to step infinite about how to become a trader. Go ahead and check that out and chuck us an email at cryptoacademycourses@gmail.com, and we'll get back to you with the full information and payment information if you're interested. Thanks guys for watching the advertisements. Let's get back into the video. CPI in 3 days. Remember that. CPI in 3 days. What is the predictions for CPI? What does the market expect for CPI? The market expects inflation for the month of September, last month, to be at 8.1%. It is currently at 8.3%. Okay, therefore we're expecting a 0.2% decrease in inflation year on year from the month of September. So inflation's going down. And that's what the market's expecting. Now, obviously, we'll get in more into the specific results of CPI, etc. in the next 3 days. It's still quite a while away. It's 3 days away. We've got a lot of pricing in to do before then. But look, the market is expecting inflation to go down. Core, that's regular inflation. Then core inflation, it's expecting it to rise a little bit, 0.2%, which again it just confuses everything a little bit because core inflation's rising, regular inflation's going down. I would say regular inflation has much more effect on the market than core inflation. However, and the reason I can say that very confidently is because look when the S&P, look when Bitcoin bottomed out. It bottomed out in June. That's when regular inflation topped. Look when the S&P had a local bottom. It had a local bottom in June, which is when regular inflation topped. So yes, regular inflation is more prominent in financial markets than core inflation. However, it does confuse things a little bit when we see core inflation going up and regular inflation going down. But what I want to talk about mainly is that, the macro situation looks like it's getting better a little bit, but there are a few things that really don't look like they're getting better. And there are a few things in terms of historical data that really worry me a little bit. I want to look into that and the effect it might have on Bitcoin. Now, the probability for a 75 basis point hike coming up on November 2nd has risen back up. It was previously at 51% about a week ago. Now it's at 79%. So again, that's a reflection of the fact that the macro looks worse and people think the Fed needs to take a more aggressive approach to control the macro. Okay, that's bad news, of course, for the markets. And obviously, it's mostly bad news for the S&P 500. Also with the S&P 500, this orange line here is the interest rates, okay, applied to the S&P 500 chart. What we can see is that generally speaking, I'm just going to tell you, I'm not going to show you, I'm just going to tell you here. You can pause the video and check if you want. Generally speaking, we don't see the S&P 500 bottom out when interest rates are rising. We see them bottom out. We see the S&P 500 bottom out and traditional markets as a whole bottom out when interest rates are actually going down. Now, interest rates are still rising aggressively, which means there's very little chance the S&P 500 will bottom. Not only are they rising aggressively, not only is that bad for the S&P, but also it's actually unconventional because when we see downtrends on the S&P 500, interest rates are generally going down. Why is that happening? Because the Federal Reserve is trying to ease the blow, ease the burden on the S&P. They lower interest rates when the S&P is going down. Now, this is the first time in the S&P 500's entire history where we've seen a downtrend in the S&P price action and an uptrend in interest rates. So it means that the Federal Reserve right now understands that they don't have the luxury to decrease interest rates while the market's going down. They are kind of acting here, in a way in which they understand they're going to destroy the markets, but they have to do it anyway. They're going to destroy the traditional markets, I should say, but they're going to have to do it anyway. So it's very bad for the S&P. I don't expect the S&P to have a bottom anytime soon. I've made myself very clear about this. I don't expect interest rates to go down for at least 5 to 6 months. Therefore, how can I expect, based on that 50 years of data, right? How can I expect more than that, actually? How can I expect the S&P 500 to bottom? I just simply can't. I don't think the S&P 500 will bottom out for at least 5 to 6 months. Now, what does this mean for Bitcoin? Because a lot of people would think, well, if the S&P is not going to bottom, that means Bitcoin's not going to bottom. That's where I disagree with you. I don't think Bitcoin relies on the S&P or traditional markets or the macro to find a bottom or a top. And the evidence of that, in my opinion, is relatively clear. The 4-year cycle is stronger than the macro. That's my claim. How can I claim that? I can claim that for a few reasons. First of all, the 4-year cycle has never been wrong. Second of all, if we look at the November top on Bitcoin, Bitcoin topped out in November, traditional markets only topped out in January. By the time traditional markets topped out in January, Bitcoin was already down 40%. If we flip that around, we could see Bitcoin bottom out 2 or 3 months before the traditional markets, and by the time they bottom out, and by the time traditional markets bottom out finally, Bitcoin could be up 40%. Just flip it around. It's simple stuff, guys. That is generally what, look, the whole claim here, that's what I disagree with. The whole claim that Bitcoin just simply can't bottom until stocks are bottomed is just absolutely ignorant of the historical data. The historical data very clearly states that is not correct. Look at November. Bottomed out, topped out 2 months before the S&P and was down 40% by the time the S&P topped. That is evidence in itself that yes, Bitcoin and traditional markets are correlated to some extent, but they're not actually perfectly connected. So yes, 100%. Bitcoin can bottom in Q4 while the S&P corrects deep into next year. 100% they can. And I think that will happen. That's what I wanted to cover. So again, recap. Broke the macro yellow line. Hasn't led to much yet. Yeah, the short-term price action is relatively bullish. We could see a resistance support flip, but ultimately the weekly chart and the monthly chart don't look particularly good. So we might be trending downwards at least to 17.6K. I see. There's no doubt in my mind at this point. Look, there's obviously a doubt. I mean, it's investing. You can't be certain, but it's very, very, very likely, in my opinion, that we do see that double bottom formation at least at 17.6K on Bitcoin. It's very likely, in my opinion, and we might go below that. And then also, macro and traditional markets. Yeah, macro looks bad. Traditional markets looks bad. There is a light at the end of the tunnel for the macro. It's still forming, and I still think the macro will be getting better by the end of this year. But as for it looking good again, it might take a long time. And I don't think the S&P 500 will bottom out anytime soon, but I don't think that relates perfectly back to Bitcoin. I think Bitcoin will still see that Q4 bottom. So basically, same old, which is what I've been saying for 11 months. I hate to be a broken record, but it really is necessary. I reach new people every day with my videos, and every day people need to be reminded of this information. If you're a daily viewer, I apologize for repeating myself, but it needs to be said, because I see so many people right now, who are just so bearish, and I'm not saying I'm not bearish, because I literally am. My prediction literally relies on Bitcoin going lower, but it's not that bad, guys. I really don't think it's that bad. I don't think Bitcoin's going to go down another 50%. I don't think Bitcoin's going to go down another 90% like some people do. I just think it's overblown at this point. And this is what you see. At the top of the bull market, you see people start to claim ridiculous things. At the bottom of the bear market, you see people start to claim ridiculous things. That's what I'll stand by. That's what I'll end the video on. Thanks for watching, guys. Hope you enjoyed. Again, check out VIP. You got 48 hours to sign up there, and I'll catch you in the next one. Cheers.